Hi and welcome to Swissquote's Daily Market Talk. It's the Ascension Thursday, May 29th. We have only good news on the wire today. Nvidia blew past expectations and there is news that Donald Trump's tariffs are illegal and may have to be rolled back within the next 10 days. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. We don't know how it does it, but it does it. Nvidia continues to defy gravity. It continues to announce blowout quarterly results and advance at an impressive speed, guys, despite all the troubles that the trade war throws on its way. Again, yesterday after the bell, the company managed to surpass the revenue expectations by a comfortable margin. They earned 44.1 billion US dollars in the first quarter of this year, despite a $2.5 billion H20 chips that they could not sell to China. They printed a charge of 4.5 billion US dollars due to the H20 inventories, but even with that, their revenue came in almost $1 billion more than expected by analysts and by the market. Their Blackwell sales were around 3 billion US dollars ahead of expectations, and their profit grew 26%. The data center sales, so the AI related sales, were up by 73% to 39.1 billion US dollars. So the company said that it will be selling for 45 billion US dollars next quarter, as the Middle East deals will be closing up the 8 billion US dollar hole that losing its Chinese business creates. Voila. So it was again a breathtaking moment for Nvidia investors yesterday. The stock jumped almost 5% and after hours trading, and the broader market implications are positive. Of course, this morning the S&P 500 futures are up by more than 1.5% at the time I am talking here this morning, and Nasdaq futures are up by almost 2% right now. The earnings season's finale has again, being very strong, with Nvidia closing the dance, we can say that. And looking back to this earnings season, the earnings growth rate for the first quarter for the S&P 500 companies was around 13%. That's almost double the estimates. The forward 12-month PE ratio for the S&P 500 stands near 21.1. So this PE ratio is above the 5-year average of 19.9 and above the 10-year average of 18.4, according to FactSet. Now, some companies in the US, like Walmart, for example, warned investors that they will reflect the tariff costs on a broad range of products that they sell, not the food prices, but other products, while others downplayed the impact of these tariffs. So Macy's, for example, this week said that it will raise the prices of its products on a surgical basis to offset them, while Dick's Sporting maintained its full-year guidance for sales and earnings despite the tariff impact. So the stocks continue climbing as a result of good earnings, with one dark spot though. The earnings guidance has darkened for the current quarter. 47 S&P 5 companies actually issued negative EPS guidance for the second quarter of this year due to the tariff uncertainties, and 40 S&P 500 companies have issued positive EPS guidance. So the performance of the index and of the stocks globally, and also the investor mood, will continue to depend on the global trade developments, the tariffs, their impact on the general level of consumer prices in the US and elsewhere than the US, and also the impact of the global trade war on the global growth rates. Speaking of which, there's big news on the wire this morning, guys. That is that a panel of 3 judges at the US Court of International Trade in Manhattan issued an anonymous ruling Wednesday, saying that Donald Trump's tariffs are illegal and that Donald Trump wrongfully invoked emergency laws in the US without an emergency need. Yes, the exploding US debt, in fact, is a problem for the US, but the answer is obviously not to slap tariffs on the rest of the world, and that they gave the Trump administration 10 days. Yes, just 10 days to effectuate its order without, however, providing any specific steps that you must take to unwind these tariffs. But it really felt like 4-year-olds were playing in a room and the game was, well, kind of getting out of control, and an adult came into the room and stopped the chaos. As a result, well, we also see the positive echoes of the block tariffs across the global financial markets this morning. In fact, the CSI 300 index is up for the very first time in 6 sessions. The Japanese Nikkei is up by more than 1%. Futures in the US and Europe are up as well. Oil is up. US crude is preparing to test the critical 50-day moving average resistance this morning that has acted as a solid resistance since the April 2nd, the date of announcement of these absurd and potentially illegal tariffs to the rest of the world. So we could actually go above that 50-day moving average level if the tariffs are no longer possible. Then gold is down, the franc is down, the dollar is up, and the US yields are up as well. This time not driven by debt worries, I mean certainly a little bit, but mostly driven by a flight toward risk on assets. Yet obviously debt worries remain on the back of investors' minds. A latest survey from JP Morgan released on Wednesday, so yesterday, warns that outright short positions against the United States Treasury markets climbed to the highest level since February across all client categories. And all client categories include central banks. They also include sovereign wealth funds, real money, and also speculative traders. So the whole thing, the whole negativeness means that the pressure on the US yield and in the US Treasury markets will certainly remain. And the Fed is not ready to step in and to do much about the market jitters that we see today, as it has no idea, as everyone else, what's next with the tariffs. And they're right not to move this time because no one knows. And activity on Fed funds futures doesn't predict a rate cut before September anyway. So they will have time to find out whether these tariffs are legal or they are illegal. But investors potentially won't need the Federal Reserve to step in if the tariff craziness ends all of a sudden. So if the tariffs are really blocked, well, prepare for a global and quite a solid risk rally in major indices across the world, the US dollar, and also commodities on improved global growth outlook. On the defense front, however, the fact that the US pulls away from providing protection to its all-time allies won't really change with the potential end of the tariff chaos, unfortunately. So as a result, the defense spending will continue and probably expand. In this context, NATO actually proposed this week expanding its expenditures toward cybersecurity and coastal security. So out of 5% of the GDP that the NATO nations will be spending on military, 1.5% would go to these defense-related areas. But investors didn't need NATO actually to increase its exposure to cybersecurity in a world where we spend an increasing amount of time online in front of our screens. The online security is just one sector that can only grow and expand. And well, let's have a last word before we go for today. The US and European leaders were normally supposed to speak today about the tariffs, but the court news from the US could actually change the mood in these talks. At this point, we no longer know if the trade negotiations are necessary anymore. If they are illegal, well, they are not necessary anymore. Now, note that the European markets are closed today, and that's due to the Ascension day holiday, but futures are trading and they're trading higher today, and the thin volumes could eventually exacerbate the market moves, and it looks like it is the good news they'll get the support of these thin volumes. So this is all for today. I'm Ipek Ozkardeskaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.